Friends, doesn't Trump deserve the title Phenomenon of the Year? Oddly, during Biden's anti-crypto administration, Bitcoin traded above $100,000. But once the supposedly pro-crypto Trump took office with his crypto-friendly team, Bitcoin recorded one of its largest recent drops. There's more to this than meets the eye. Trump's economic policies create market uncertainty, forcing investors to wait for stabilization. Historically strong February became challenging this year. Trump's tariffs dumped the market and officially took effect on March 4. On April 2nd, he'll impose tariffs on all agricultural products entering the U.S., signaling rising inflation, the worst enemy of stocks and crypto, as we've seen with each CPI report. Meanwhile, Trump is preparing to launch a crypto reserve, not just for Bitcoin and Ethereum but also for altcoins like Solana, XRP, and Cardano. So we have tariffs negatively impacting the economy versus a potential market-boosting crypto reserve. Which way will March tip the scales? This month could define crypto's future in 2025. March will test every investor. The early month swings from 78K to 94K, which wiped out weak hands, were just the beginning. Only those who withstand upcoming challenges will profit. This month will be brutal. Today, we'll analyze key market factors, explain why we should forget about reserve altcoins, conduct Bitcoin technical analysis to identify the local bottom and key targets, and check top analysts' predictions. Some expect a pump to $100,000. Others foresee a drop to around $70,000. On March 2, Trump announced his desire to include both Bitcoin and certain altcoins in the U.S. crypto reserve. The market initially reacted positively before dropping. Analysts concluded there will be no altcoin reserve. I agree. Two possible reserve scenarios exist. First, 100% Bitcoin reserve, backed by many senators and Michael Saylor. Second, a mixed portfolio of Bitcoin and mentioned altcoins. While Bitcoin could be a reserve asset, altcoins don't fit the bill. Trump can't just pick random coins. Such a move requires congressional approval. There's also the risk of market manipulation. Analyst Samson Mull commented that Trump's remarks about adding altcoins could be an attempt to please lobbyists pushing these coins. Some coins rose before Trump's statement, fueling rumors of leaked information. Peter Schiff called Trump and his son scammers, accusing them of insider trading. The altcoins Trump mentioned fail to meet key reserve criteria. A proper reserve asset must operate on a proof-of-work system, have no unlock periods or allocations for early investors, exist for at least 10 years, offer secure storage and cold wallets, provide complete blockchain auditability. Only Bitcoin fits these criteria. Ethereum is questionable. This doesn't mean Solana, XRP, and Cardano are bad projects, just unsuited for a national reserve. An altcoin reserve would create conflicts of interest. David Sachs, Trump's crypto czar for digital assets, promotes Solana because he's invested in it. The same applies to Ripple and Cardano heads, who have vested interests. Such lobbying could lead to corruption and instability. Major unresolved questions remain. Who will manage the reserve? How will security be ensured? How will assets be purchased? Without answers, creating a reserve is impossible. The US isn't ready for an altcoin-based crypto reserve. Trump's statements sound big but lack real action. His plan requires congressional approval, which he doesn't have. Even with approval, conflicts of interest and execution clarity would remain problematic. The only realistic option is a Bitcoin-only reserve. With Bitcoin's ETF, the government could buy through BlackRock, though with fees. We're waiting for more information from Trump's team. March has just begun, yet the market has already seen a 20% surge followed by a 15% drop, liquidating many investors. What's next? Inflation remains concerning. January's CPI exceeded 3%, triggering the market dip. The next report drops March 12th, and February's data might still show 3%, not fully reflecting tariff impacts. By April and May, we could see noticeable inflation rises. Don't expect rate cuts soon. The Treasury Secretary may discuss lowering rates, but the Fed decides. Until Jerome Powell sees stable, declining inflation, they won't consider cuts, likely not until late 2025. Every negative economic report adds market uncertainty, weighing on crypto throughout March. So what's next for Bitcoin? From a technical perspective, Bitcoin currently holds above critical support at $82,500, coinciding with the 200-day simple moving average. If the price drops below this NA, it signals further downside risk. We could see fresh lows, with the first key level around $80,000. This area should provide intermediate support but unlikely to offer strong stability throughout March. The risk of testing the $78,200 level from late February is growing significantly. Another interesting zone is the fair value gap between $73,600 and $76,550, formed in November when the market surged after Trump's election victory. If Bitcoin moves into this area, it could mark March's local bottom. The most critical support remains at $70,000. More concerning is the bearish cross forming on the daily chart, the 50-day SMA crossing below the 100-day SMA, indicating shifting market sentiment. To determine whether this signals a sustainable trend reversal, we need to monitor the market for at least 2 weeks. March could see Bitcoin trading within a new range, support above $70,000 and resistance near $90,000. Given negative catalysts, particularly from the US economy, this month is likely to be red. Alternatively, it could close flat since March has already started negatively. Despite market tension, cryptocoin analysts highlight 3 factors suggesting Bitcoin could rise in March. First, open interest declined by 14% on March 1st. Open interest reflects the total number of outstanding derivative contracts. When it decreases, market leverage is shrinking. These pullbacks often give buyers a chance to re-enter at lower levels, potentially triggering a new rally. Another recovery signal is the fear and greed indexes declined to 15, indicating extreme investor fear. When this index drops so low, it suggests mass selling. However, such extreme fear levels often indicate an oversold market nearing a bottom. Analyst Ali Martinez pointed out that funding rates on exchanges have turned negative, historically an important signal preceding price rebounds. March will be tough. Crypto is highly volatile, especially for emotional traders who struggle with losses or sticking to strategy. This is why some traders lose while others profit. Behind every profit is someone else's loss. Think beyond single short-term movements. Smart money isn't built on one trade. Well, friends, that's all for today. Don't forget to subscribe to our channel to stay updated on new videos and share your opinion in the comments. Good luck and until next time.